Welcome back to another video. Today's gonna be a juicy one. I want to talk about how to effectively trade prop firms in 2024 going into 2025. We're currently in a space where the opportunity to step inside financial freedom is so big that the last thing that you want to be doing is missing it entirely or be doing it incorrectly. As a trader, your goal is to identify opportunity, and this is definitely a good one. I'm going to be teaching you how you can go from 0 to 10K per month consistently utilizing prop firms. Now, if you're watching this, you probably already know what prop firms are and are likely trading futures. If that's not the case, then the YouTube algorithm is straight dookie water. What I want to go in depth on is how you can maximize the opportunity of prop firms and do it efficiently. Now on the screen right now are the top prop firms in this space currently. These are the three main ones, and on the side right here are some rising stars that I've been keeping an eye on over the past couple weeks, and I'm gonna go more in depth on them later in the video. Now I can easily go, hey, with all these firms, you can get 100 accounts in total, risk $500 per trade, all you need is one winning trade, and boom, you're making 50K per month. Like and follow for more. Hell no. I genuinely can't believe I just did that. I'm gonna go through the intricacies of these prop firms that no one really goes over and give you the same exact framework that I give to my friends, and they go on to make 10K per month fairly easily. Now, we all know Apex, always doing an 80% sale or a 90% sale. If you have ever paid full price for an Apex account, go ahead and click off this video for me, because I'm gonna be honest, this trading stuff, it's not really for you, okay? Like, go dropship or something. On a 50K account, you have a 2.5K trailing drawdown with a $3,000 profit target. Each 50K account should cost around $33.40 with an 80% sale, or $16.70 with a 90% sale. Now on a 150K account, we have a 5K drawdown with a 9K profit target, priced at $59, or basically $60 for an 80% sale and $30 for a 90% sale. Every single account now is $85 for a lifetime activation fee. This wasn't always the case. They really just implemented this a couple months ago, and before then I believe it was like $150 for a 50K lifetime account and like $250 for like a 150K lifetime, and they brought it down to $85. My speculation is that it was because the competition in the space right now, people are undercutting them in price, so they really had to do something to make their activation fee extremely cheap as well. TopStep's 50K account has a $2,000 end of day drawdown with a $3,000 profit target. Now, what is the difference between trailing drawdown and end of day drawdown? Trailing drawdown on Apex trails live. So let's say you make $100 and go back down to break even. On an Apex account, it will trail with the $100. So you'll technically be down $100 and only have 2.4K trailing drawdown left. But with a TopStep account, it trails end of day, so it doesn't trail with your live position as it's going up like Apex does. End of day drawdown is so much easier to trade with, and you can manage your risk 10 times easier. Now on a 150K account on TopStep, they have a 4.5K end of day drawdown with a $9,000 profit target. Okay, the 50K accounts are priced at $49 and the 150K accounts are priced at $149. Now, if you pass your account, your activation fee will be $149. So your all-in cost on a 50K account will be $200, and your all-in cost on a 150K account will be $300. Okay, now with TopStep, you cannot pass in a single day. They have a rule that you cannot make over 50% of your total profit target in a single day. What do I mean by this? If your profit target is 3K, you cannot make over 1.5K in a single day. And if you do, let's say you make 1,600 instead of 15, you'll have to make an extra $100 to pass your account. With my funded futures, they have hella plans, so I'm gonna just go over the starter plan. Their sales are 5%. Woo, 5%, like that's gonna make a difference, okay? On their 50K account, they have a 2.5K end of day drawdown with a 3K profit target, and on their 150K, they have a 5K end of day drawdown with a 9K profit target. With my funded futures, they have a daily loss limit implemented on the accounts, so if you hit it, it is literally impossible to blow up your entire account in a single day. So if you're a terrible risk manager and you find yourself blowing up multiple accounts in a single day, my funded futures Futures could be the best prop firm for you. The 50K account goes for $80 and their 150K account goes for $220, okay? You can see that on their activation fee, I put none because recently they just implemented or actually got rid of activation fees entirely. So $80 will be your all-in cost for a 50K account if you pass in a month. If you don't pass in a month, you'll just have to keep paying the $80 per month until you pass, but there won't be an activation fee. Same thing for a 150K account, $220 will be your all-in cost and you won't have an activation fee compared to $300 on Top Step or 100 and something on Apex. I don't want to do the math. So throughout all these firms, we can clearly see that on a 50K account, My Funded Futures is the cheapest option. This is only if you pass the account. If you fail the account, you'll have to pay the full $80 again. If you don't, the costs add up over time and can get more expensive compared to the other firms. So for example, if you pass only 1 in 5 accounts, you'll be paying $400 to My Funded Futures, but with another firm like Apex, you'll be trading $285 with the activation fees included. Personally, I believe My Funded Futures should only be traded if you know how to trade already and you are already profitable. Then and only then do I think My Funded Futures is the viable option. And if you are not currently profitable with prop firms or just in your trading journey, I personally believe that Apex is the best prop firm to help you learn and give you the skill set to become a profitable trader. Once you have that skill set, you can move over to My Funded Futures or potentially Top Step. Now at the bottom right here, we can see that there is something called a profit target to drawdown ratio. This is something you should be focusing on if you want to get the best account possible. Profit target to drawdown ratio is basically how much drawdown you have relative to your profit target. Self-explanatory, I know, but like some people still need it. The higher this number is, the easier it is to pass an account, which is the most important thing in this evaluation phase. The reason you want to calculate this is because a lot of the higher accounts have worse profit target to drawdown ratios, so that high account size looks very attractive to a lot of traders, yet their ratio is extremely terrible, hence why you should not go for those higher account sizes. On an Apex 50K account, your PT to drawdown ratio is 0.83 to 1. On a 150K, it is 0.55 to 1, which means that it is significantly harder to pass a 150K account compared to a 50K account. Now looking at both of these, we can clearly see that the 150K account has 3 times as much profit target than the 50K account, but has twice as much drawdown as the 50K account. So mathematically, it is 1.5 times harder to pass this 150K account. And if you do pass, you'll have the same drawdown as 2 50K accounts, right? But let's say you get 2 50K accounts just by themselves, you will have the same drawdown, but you'll have a $3,000 smaller profit target with this scenario. So instead of going for one 150K account, you should go for 2 50K accounts because it's going to be easier to pass and you have the same drawdown as a 150K account. The higher account size means absolutely nothing. I'm going to be honest with you. The only thing that matters is your drawdown and your profit target. And once you're on a funded account, the only thing that really matters is your drawdown. See, this is how they get you. A newer trader is going to look at this huge account size and go for that because the smaller account sizes just won't make as much money compared to them. This isn't the case. We can see that 2 50K accounts is relatively the same price as one 150K account. And if you get 2 50K accounts, you will have a 5K trailing drawdown with a 6K profit target, compared to a 150K account, the same drawdown, but an additional $3,000 to make on that 150K account. So which one do you want to go with? A 150K account that's harder to pass, or 2 50K accounts that are easier to pass with the same exact drawdown? The best bang for your buck account sizes are number 1, a 25K account, number 2, a 50K account, and then number 3, a 150K account. Any other account is a scam. Don't even go for it. Trust me, I've done the math so you don't have to. Use my pain and suffering for your benefit, please. If you want to increase the difficulty, honestly, be my guest, okay? Like, I'm not gonna stop you. Now, why do I say 25K accounts are the easiest to pass with Apex, but they're not on this list? Mainly because they're profit target to drawdown ratio is a 1 to 1 compared to a 50K account being a 0.83 to 1, which means you lose out on 0.17 drawdown ratio. and a 150k account being a 0.55 to 1, so you lose out on 0.45 on that drawdown ratio. Now moving over to Top Step, on a 50k account you have a 0.66 to 1 drawdown ratio, and on a 150k account you have a 0.5 to 1 drawdown ratio. The drawdown ratio is the lowest on Top Steps, so if passing an account is your weak point, Apex and My Funded Futures would be the way to go. And going over to My Funded Futures, it's the exact same thing as Apex. Now this is just the evaluation phase and not even the funded phase, and I haven't even gone into the strategy on how you can get to 10k per month using this. And the reason I'm going through this right now and not just telling you, hey, just get all these accounts, is because you need to build a proper foundation before you can start building, and this is that foundation. So if you're considering skipping this step, you're going to be skipping the foundation that you're going to be building upon for years to come. Now let's go over to the funded phase, okay? All y'all kids in the back better start listening up. Now we're gonna go over Apex first. On Apex, you have a 30% consistency rule. You need to trade for 8 days to be eligible for a payout. You have a buffer, so I'm gonna go more into that. You have an unrealized loss of 30%. You don't have any daily loss limits, and you have an inconsistent sizing rule. Okay, the max amount of accounts you can have with Apex is 20 accounts. Now, if you're confused about any of this, which you likely are, I'm gonna go more in depth on it. Now, the 30% consistency rule, what does that mean? It's basically you cannot have a trading day be greater than 30% of your total profits. So let's say you have 10k in total profits. One trading day cannot exceed $3,000, and if it does, you're gonna have to make more money to make sure that $3,000 is less than 30% of your total profits. So for example, you make 5k in a single day. To get below this consistency rule, you're gonna need to make $16,700 in total profit, so an extra $11,000. Now you can see that they do have a buffer. What is a buffer on Apex? They recently just added this rule, and in my honest opinion, it's extremely stupid, but hey, I'm not running this firm, so I really can't say none, all right? It's basically when you get a funded account, you have to make your drawdown on that funded account, and that is considered your buffer. Anything above your buffer is what you are eligible to withdraw. So let's say on a 50k account, your drawdown is 2.5k. Once you get above 2.6k, anything you make above that is what you're eligible to withdraw on that account. Before, when your drawdown stopped trailing, you were able to withdraw on that account. But with this new change, you cannot withdraw right as your drawdown stops trailing. It is only what you make above that trailing drawdown. So once you make 2.6k on that account, you would need to make an additional 2k to withdraw 2k. So total, you would need to make 4.6k to withdraw 2k, which is extremely stupid, but hey, I'm not running this company. If it's a 5k drawdown, anything you make above 5.1k is what you can withdraw. Now, why did they implement this? Mainly because a lot of traders would get to 2.6k and then withdraw and then blow that account, get a new account, get to 2.6k, withdraw, blow the account, keep on repeating that, right? They realized that their blow up rate on their funded accounts was extremely high, and this is to combat that. And now Apex's way of seeing who is an actual trader and who isn't is that buffer zone. Then they can double down on the people that can actually trade and copy their trades with twice or 3 times their size, because that's their business model. They're a copy trading firm, and then they fund people on the side as well. Majority of their money comes from copy trading their best traders. So to find those best traders, they had a buffer zone to see who can actually trade and who can't. Over time, they make more money. As a business, real recognize real. I'm gonna be dead ass. This is an extremely good idea. But as a trader, I hate it. Unrealized loss rule of 30%, they recently implemented this as well with the buffer. It means that you can't have one trade being an unrealized loss of 30% of your total P&L. Let's say you're up 10k on an account, you cannot have one trade be down in drawdown, not realized, but unrealized, $3,000 in drawdown. If you do, then you can potentially get denied on payouts. If you haven't passed the drawdown yet, it will take 30% of that number on that account. So if it's a $2,500 drawdown, you cannot have a single trade be down over $750. Once you're above the drawdown, your number will drastically increase. So if you're at 5k, it will be 1,500. No drastic inconsistent sizing. What does that mean? Nobody knows. That's Apex Trader funding for you. Now going over to Top Step, what are their rules for payout? Literally just one. Have 5 days of $200 in profit. It's that simple. Not even consecutively. It can be like 3 months apart. But if you make $200 in profit for 5 days total, you can withdraw. Once you hit that, you're good to go. No consistency rule, no buffer zone, no nonsense, nothing. Now compare that to Apex. Top Step is 1,000,000 times better for getting payouts, right? But if we go to the evaluation phase, we can see that Top Step is the hardest firm to get funded on, and that's for a reason. Going over to My Funded Futures, you need 5 days of $100 in profit and a 40% consistency rule. Simple. Compared to Apex, My Funded Futures and Top Step are goated for payouts. And these are the firms I would recommend if you're going for payouts. But if you're not, then I would say go for Apex.
But isn't everyone going for payouts?
No. Some people's goal should be to learn how to trade under these prop firms' conditions. And with that, Apex shines the brightest. You learn how to trade on Apex. You make sure you have a consistently profitable strategy, and you learn risk management through Apex. Once you learn that, you can move over to My Funded Futures and Top Step and all these other firms and rinse the hell out of them with what you have learned on Apex. I've used this analogy multiple times because it's literally so good. It's like starting off a game of Call of Duty on veteran difficulty, and then on the last couple missions, you switch to regular difficulty. When you switch to regular, you're like, yo, this game is hella easy. What was I tripping over? And once this game gets really easy, you can rinse these prop firms like crazy and make 10K per month extremely easily. And 10K is the low end, I'm gonna be honest, okay? You can make upwards of 100K, 200 to 500K per month using these prop firms. Once you have a profitable system and good risk management, you should go over to My Funded Futures and Top Step and rinse the hell out of them. Now, what are these firms that I've had in the corner since the beginning of the video? For instant funding, we only have one firm available right now, which is called Tradeify. They are not something you should be learning how to trade with. If you're learning how to trade, it should be with these 3 firms, primarily Apex, and then these 2 other firms, right? But once you're funded with a few accounts, these firms would be the way to go with. These firms are only for traders that 1, have a profitable strategy, and 2, have good psychology and are consistently profitable with these other firms. Because if you have that, the ROI on these firms is insanely high. These are known as instant funding firms. No evaluations, no nonsense. You don't even have to go through this entire phase that you do with all these other firms, okay? You get funded instantly for a fixed price. Since you get funded instantly, they are more expensive. On Tradeify, a 50K account is $550 and a 150K account is $700, but you should likely be paying like 50% of this, so $350 or $275 on a 50K account. Now, compared to all the other firms, these instant funding firms have a fixed 1-to-1 drawdown ratio, which is the best out of every single firm out there currently. What is their drawdown? They have a 5% fixed drawdown. On a 50K account, they have a fixed 2.5K drawdown, and on a 150K account, they have a 7.5K drawdown. Granted, this is not regular live trailing drawdown like Apex, but instead it's like My Funded Futures and Top Step that have end of day drawdown. So the drawdown is better, they have more drawdown, and their profit target to drawdown ratio is literally the best out of every single firm. I'm gonna be honest, okay? Now they only have 3 rules that you have to abide by to get a payout, okay? Number 1, trade for 10 days on both accounts. Number 2, be in profit 5% of your total account, which is why I say profit target to drawdown ratio, right? And number 3, consistency rule of 20%. Now the consistency rule is a bit worse on these instant funding firms compared to Apex, Top Step, and My Funded Futures, but the fact that they have a 1-to-1 profit target to drawdown ratio and also end of day drawdown and also more drawdown than all these other accounts, I would personally say that this consistency rule is worth it. It is worth it to have a 20% consistency rule if my drawdown ratio is a 1-to-1 and I have more drawdown and it's also end of day. The max amount of accounts you can get with this firm is 7. So now that you know which accounts to go for and have built a proper foundation, let's deep dive how you can make 10K per month consistently with this information. Let's get it. I just want to let this be clear. This is only for profitable traders. If you are unprofitable on one account, you're going to be unprofitable on 50 accounts. The only thing that's going to 50x is your losses instead of your gains. Okay, so focus on one account first if you're unprofitable, and once you've focused on that and have been getting consistent payouts on it, then and only then should you apply this strategy. Now, with all these firms on the screen, you're not going to be trading one particular firm, but instead you're going to be trading all of them combined. What this does is that it diversifies your risk, so you're not relying on one firm to get payouts, right? So if one firm does go under, you're not going to be affected as much compared to trading all of them at the same time, right? Because the probability of all of them going under at the same exact time is extremely low compared to one of them going under and then you losing all of your accounts and your monthly recurring revenue. Because if that one firm goes under that you're extremely heavy in, you're going to start off back at square zero, which is not what you want to be doing with this strategy. But instead, you want to be trading all of these, so your probability of starting back at square zero is extremely low. Square one, I mean. Now, personally, I haven't seen any big futures prop firms go under, but I have seen a lot of Forex prop firms go under, especially like even top 5, top 3 prop firms on the Forex side, right? So a lot of people that were extremely leveraged inside one firm, instead of diversifying all their risk, they lost out on a lot of income, and a lot of their payouts just got locked up and they lost all that money just because they were so heavy on that one firm. It's always better to be safe than sorry, because you don't know what's going to happen in the future. We are risk managers first, so you should be managing your risk by diversifying your portfolio. So while I'm editing this, a firm that I talked about in this video just went under. They ceased all their operations. I will say this firm was the sketchiest firm out of all the firms out there, so I am not surprised that they went under. The ones I'm talking about going forward in this video are legit in my opinion. So always remember to do your own research before going with the firm, and don't go into it blindly. Learn the terms and conditions, learn the payout policies, learn why they are a profitable firm, and if they are profitable, they are more likely to pay you out. If the rules are too good to be true, the probability of you getting paid out is likely low. Did I get affected by this firm that went under? Yes, but I can't really do anything about it. It is what it is, you feel me? Secondly, trading multiple prop firms increases your profits, right? You can max out on a single prop firm. Once you do, you can go over to another firm. Once you do that, you can go over to another firm and then continue doing that until you're maxed out on every single prop firm. This multiplies your P&L, and those 1K months turn into 20K months and 50K months fairly easily doing the same exact trading. For example, if you can make $100 on one account consistently, you can do the same exact thing and copy your trades across 20 accounts. So instead of you making $100, you make $2,000. With this strategy, it's not something that you get funded 200K and yeah, that's it. That's your end all be all goal. You're going to keep this account forever and that's it, right? This is not that type of strategy. These funded accounts should not be treated as if you have them forever, but instead used as leverage. These accounts are for you to make as much money as possible, withdraw from them, and then repeat that. With proper trading, adhering to their rules, of course, right? The last thing you want to be doing is going against their rules and getting banned from the firm. Don't do something stupid like going long on one account and then short on another account on FOMC and then crying when you get banned on that firm, okay? Good trading only. The ROI on this strategy is far too great for you to even risk being banned on any of these firms. Because if you do, you're literally shooting yourself in the foot, and I'm not even joking. You're gonna slow yourself down way more if you get banned on the firm. So adhere to their rules even if they're trash and you don't like them. I'm talking to you, Apex. The goal is to have multiple accounts across multiple prop firms, and every single one of these prop firms offers multiple accounts. Let's say you make $2,000 per account and you have 20 accounts. You're making 40K per month. Then suddenly one firm bans you because you didn't adhere to their rules, okay? Let's say you had 5 accounts on this firm. The firm that banned you allowed 20 accounts in total, so you got banned on 5 of them and you missed out on 15 potential new accounts. You didn't lose out on just 5 accounts, but instead you lost out on 20 accounts. The 5 accounts you lost from your profits currently, and the 15 potential new accounts that you lost for your future self. You gave your future self a roadblock and put yourself back $40,000 per month just because you didn't want to adhere to their rules. Do not be one of these guys. Now I'm talking about trading on multiple accounts, and it's literally impossible to take a trade with a stop loss and take profits on, let's say, 20 different accounts at the same exact time and then getting filled at the same price and then getting out at the same price. It's literally impossible doing it manually yourself. This is a hassle, so you would need to utilize trade copiers. If you have, let's say, 50 accounts in total, you can copy your trades from one account to the other 49 accounts. This is a literal cheat code and should be implemented once you start trading above 2 or 3 accounts. In my personal opinion, it's relatively manageable on 2 and 3 accounts, but above that, it's extremely hard, so I would definitely recommend a trade copier. Once you're at 3 or 4 accounts, you're likely using the money you make on the first few accounts to fund newer accounts. So the profit you make on these first couple accounts, you can use towards a trade copier. There are 2 big ones currently: Apex Copier and Replicanto. Extremely easy to set up, just follow their guide, and this video is not going to be about that. Once you get one of these copiers, you can use it to copy trade any of your accounts on NinjaTrader, specifically for NinjaTrader only because they are a NinjaTrader plugin. Some softwares provide trade copiers built in, so you wouldn't need to go through that step if you're using those softwares. Granted, they are paid softwares and not free ones. This is a very important step because trade copying is going to be the backbone of how you can get to 10K per month consistently. I did forget to add this, but with every single prop firm, you will have likely multiple plans. You will have a Rhythmic plan and a Tradeovate plan. With NinjaTrader, you can only have one Rhythmic connection at a given time, so you cannot have multiple connected at the same time, but you can have multiple Tradeovate connections. So if you are copy trading, you will want to go with Tradeovate accounts first. You can either choose Rhythmic with Apex and Tradeovate with every other firm that I talk about in this video, or you can just do Tradeovate on everything, and if a firm offers only Rhythmic, then that is a red flag in my books. Tradeovate has partnered up with NinjaTrader, which is a regulated broker. So these regulated brokers are very strict on who can actually use their platform and who can't. So ideally, you want to be going for firms that do offer Tradeovate plans. If they don't, very big red flag. And every single firm that I talk about in this video does offer Tradeovate. Apex, MyFunded Futures, TopStep, and Tradeify all offer Tradeovate accounts, so you can use them on NinjaTrader to copy all of your trades. So I've never gotten a TopStep account with Tradeovate, but apparently it doesn't work with Tradeovate if you're trying to connect multiple logins, and it doesn't work with NinjaTrader. So on TopStep, you would want to get the Rhythmic account if you're connecting it to NinjaTrader and you are trade copying on NinjaTrader. If you are not doing that and you're doing it separately, then you can do whatever you want with TopStep. But ideally, you want to have Rhythmic with TopStep and Tradeovate for everything else. Do not make the mistake of getting multiple Rhythmic accounts, because then you won't be able to copy all of your trades on NinjaTrader, and you might need a whole nother platform that you'll likely have to pay for. So you start off by determining your financial situation, put some money to the side, and fund Apex accounts first. Ideally, you want to be buying 50K accounts and 25K accounts first because they're the easiest to get payouts with. If you have a profitable strategy and are a profitable trader, getting a payout should not be an extremely hard thing to do. Once you've gotten this payout, you're going to use it to fund more accounts. Now, this is very easy to say, but to go deeper into the payouts, you're going to need to learn a few crucial things about your strategy and your trading style. So with your trading strategy, you should already know your win rate, your average R per trade, your max consecutive losers, and your average consecutive losers as well at any given time. With all this information, you're going to form a risk plan that makes it easy to get payouts from this firm. Your win rate and your average R per trade tell you how profitable you are. But the thing with your win rate and your average R per trade is that they are inversely correlated. The higher your win rate goes, likely the lower your RR will go. It is extremely hard to find a high win rate, high RR strategy, but not impossible though. Learn your average drawdown per trade and your max consecutive losers. This will tell you how much you should be risking per trade. The higher the max consecutive losers is, the lower your risk should be per trade. Let's say you have a max consecutive loser of 10 on your trading strategy. Extremely high. This means that you should have a buffer of 10 trades no matter what on your account at all times. You should ideally have an 11 trade cushion on your account just in case you go through a period of drawdown. If you do go through that period, because it is entirely possible, you don't lose the account, which is the most important thing. Now, if your average consecutive losers is, let's say 3, you can look to increase your risk, mainly because that number of max consecutive losers at a given time was an anomaly in your strategy. Let's say the probability of this happening is 5%. If you lose your account, boo-hoo, you lost your account. It is what it is. Every single profitable trader that trades with prop firms has lost an account. It is what it is. It's part of the game. But you can still keep that same risk profile, because if you know mathematics, if the probability of something happening once is 5%, the probability of it happening twice in a row is 0.0025%. Now, this is why I always say to play within the probabilities of trading. Does this super small number scare you? It shouldn't. So you should not be getting nervous on any of your positions if they start to go against you, or if you are in a period of drawdown. Now, if you have a 10 trade cushion and have a $2,500 drawdown, you should be risking $250 per trade. Simple as that. Let's say you make 10R per month, you make $2,500 per month. You can use this $2,500 and withdraw that depending on which firm you're on. If you're on Apex, it'll just take an extra month. Withdraw this 2K from this balance and you'll have $500 left. So what you'll do is you'll lower your risk and continue building that account. Now, with the 2K that you have, you're going to use $1,500 of that to buy Balenciaga homeless shoes. All right, I know some of y'all actually do that. Do not be one of these people. Now, with this 2K withdrawal, you can use that to get 10 accounts on Apex for $350. Or if you don't want to trade on Apex anymore because they're trash, you can go over to My Funded Futures or even Top Step right here. Now, you'll likely fail half of these accounts and pass the other half, so you'll have 6 accounts in total. By this point, that funded account that had $500 left in it, it should be ready for another withdrawal. Withdraw all the money out of that and use that to fund more accounts, right? And rinse and repeat the scenario. Now, once you're at around 5 or 6 accounts on Apex, you do not have to continue trading with Apex, because I know their rules are extremely trash for funded accounts, right? So what you can do is, once you have around 4 to 5K coming in, you can go over to My Funded Futures and Top Step and use those, because they offer really good payout rules. By this point, you should have either 6 to 10 accounts. Trade that for 1 month with the systems that you have implemented using the trading strategy that you've created over the years, and you should be eligible for a payout now. 6 accounts, each with a $2,000 payout, totaling $12,000 of payouts in a single month. Now, congratulations, you're officially making over $10,000 per month, and it took you less than 6 months to do so. That wasn't so hard, was it? Yes, it was. Trust me, I know. Now, the name of this game is numbers, so 10K per month is literally just the tip of the iceberg. When you've maxed out on every single one of these firms, you should have 20 Apex accounts. My Funded Futures is 3 accounts, Top Step is 5 accounts, and with Tradeify, it is 7 accounts, all totaling 35 accounts. With these many accounts, let's say you get a minimum payout of $1,000 per account, you are now making $35,000 per month using the strategy, all from trading the exact same way, the exact same system, the exact same risk profile, and doing the exact same things. But the only thing you did differently is you had multiple accounts and you trade copied to all those accounts. But how would you do this? Go from 10K per month after this video to 100K per month? If this video gets enough likes and comments, then I will make that video. But right now, that's a story for another day.